Well, it's been 1 week since I did my last podcast. And when I did my last podcast, it was also on a Wednesday. And what prompted me to do it that day was the fact that it was the first day that gold broke 4,000. And there was a lot of media attention. Of course, they missed the bigger picture as to why gold was at 4,000 and what it portended. But they did cover it. You know, media had pretty much ignored gold all the way up to 4,000. But when it got there, all of a sudden, it was a bit of a story. And now it's kind of slipped, back on, the back burner again. But here we are a week later, and gold is now over 4,200. So gold has added $200 in 1 week. Silver closed today above $53. Remember, $50 was resistance. It was a big double top. And what was I saying on this podcast? I thought that we would blow through that double top and that 50 would become resistance, which is now the case. And in fact, if you get a chance to buy silver anywhere near 50, do it. But again, I got no problem buying it at 53. I said the same thing when silver broke above 30. I said 30 is the floor. So if you have to pay 32 or 33, what's the big deal? You don't have a lot of downside risk. So even though silver might pull back to 50 and a half or maybe 49 and a half, so what? Buy it now. It's not that much downside, and it may never pull back. We may never see sub 50 silver again. Now, maybe we will. I don't know. We're only $3 above it, but we may be at 60 before we're back at 50. Look at the momentum. In fact, if gold continues to rise $200 a week, we'll be at 5,000 a week before Thanksgiving. And if we keep rising by $200 a week, which percentage-wise would be a smaller percentage if we're at 5,000 than 4,000, but if we keep going up at 200 a week, gold will be at 6,000 before Christmas. Now, I don't expect gold to be at 6,000 before Christmas because there's got to be pullbacks at some point, although maybe not. Who knows? But it's clear that gold is going up. I mean, year to date, gold is now up 60%. Silver is up 84% in 2025. We still got 2.5 months left of the year. We have not had a year like this in precious metals since the 1970s. And that's not a coincidence that what's happening now hasn't happened since the 1970s, because we are living through a similar economic period. It's not just that we got stagflation, which we had in the 1970s, and we're going to get a lot more of that in the 2020s. But again, 1971, we kicked off that decade going off the gold standard. That's what set all this in motion. That resulted in a major dollar depreciation. And gold went way up during the 1970s. Well, something is happening now that is just as significant and maybe more. So back then, we went off the gold standard. So we told the world, hey, we're still on the dollar standard. We're just going to not back it by gold anymore. So we're going to renege on our commitment. We're not going to give you gold for your dollars. You could just hold on to your dollars. And the world basically did just that. The world stayed on the dollar standard, despite the fact that we, pulled the rug out from under them in that we reneged on our promise to pay gold for their paper. But they continued to, keep the dollar as the reserve. Now, they marked the dollar down. The dollar lost 2/3 of its value against other currencies, but they still held it as their primary reserve asset. What's happening now, over 50 years later, is now the world is taking action. They're pulling the rug out from under us. They are now moving off the dollar standard. And this probably has even bigger implications for us than going off the gold standard did, either for them or us, because our entire economy, our entire way of life over that time period has evolved to become dependent on the dollar's reserve status, dollars that we can create out of thin air. Not that we have to back by gold or anything. We just conjure them into existence, and we use those dollars to buy consumer goods that we don't produce. So we get to live beyond our means. And then the world is in a relationship where they loan us back the dollars they earned, selling us stuff that we didn't make at low interest rates. So now we can go into debt and buy more stuff, and we can buy assets, and the stock market goes up and the real estate goes up. But our whole phony economy is completely built on the foundation of the dollar's reserve status, and that's the rug pull. That's what's happening. That's why gold is doing this. Right? It's not just a random coincidence. And of course, the significance is being lost on just about everybody when I hear the discussions on gold. But probably one of the most significant admissions that I've heard was from Jamie Dimon, who is a highly respected guy. And Jamie Dimon was quoted as saying, gold can easily go to 10,000, easily. And I agree. It can easily go to 10,000, and it very well will go to 10,000 and a lot higher than that. But here is the more significant aspect of the Jamie Dimon quote. Jamie Dimon said, quote, "This is one of the few times in my life it's semi-rational to have some gold in your portfolio." This is one of the few times in his life. I mean, he's my age, I think. He's been around for a long time. But he's saying in his entire life, this is one of the few times that it's semi-rational, like not completely rational, but at least there's a modicum of rationality where you might want to have some of your portfolio in gold. Now, first of all, clearly, if gold is above 4,200 and 20 years ago, it was 25 years ago, it was below 300. And that was certainly within Jamie Dimon's lifetime. It was within his career, not just his lifetime. But obviously, if gold has gone from 250 to 4,000, that means it's always been rational to have gold in your portfolio. Not just semi-rational, 100% rational. Gold has outperformed the S&P 500 since then. So if it was rational to hold stocks, it was certainly rational to hold gold. The significance is that even though it was rational to hold gold 20 years ago, 10 years ago, 5 years ago, Jamie Dimon didn't realize it. See, what he's actually saying is not that this is the first time that it's rational to hold gold. This is just the first time that he understands the rationality. You see, up until recently, it was just guys like me. I would come out and I would try to explain to people when gold was 300, 500, 800, 1,000, 1,200, 1,500, 2,000, why they needed to own it. And people didn't see the rationale, right? They thought I was nuts. They thought I was crazy because I was worried about the dollar. I was worried about the deficits, the budget deficits, the trade deficits, all of the things that Jamie Dimon is now finally worried about. Finally, with $4,000 gold, the problems that I was worried about at $400 gold suddenly concern Jamie Dimon. Now, the truth of the matter is, they were a problem back then. The difference is, it's a much bigger problem now. And the more significant difference in that is, had people like Jamie Dimon recognized the problem that I recognized 20 years ago, maybe we could have done something about it. Maybe we could have diffused this bomb before it went off. But because we waited as long as we have, there's nothing to do. I mean, it's going off no matter what. It's impossible to diffuse it. And so we're going to have this massive crisis that I have always been concerned about. I've always been warning about it. But it is very significant that now you have a major Wall Street figure acknowledging that, yep, I guess it makes sense. It's not completely nuts, right, to buy some gold. In other words, he's also validating the fact that I was recommending it, because if it makes sense to buy gold at 4,000, then was it nuts to buy it at 400? Was it nuts to buy it at 1,000? Obviously not, because if you're going to buy it now and you're not crazy, then you weren't crazy to buy it then, right? Now, everybody thought I was crazy, right? But I knew I was the sane one, right? In an insane world, right, it's the sane man that looks crazy. Everybody else was irrational. My view on gold was the rational one. It just wasn't understood by enough people. And the problem is the people who are now gradually waking up to the realities that I have known about and warned about for pretty much my entire career, right? They still don't get it. They still don't understand really the severity of what's going to happen. But at least they recognize now that, yes, there is a problem. I hear people talk about the dollar debasement trade, right? Well, yeah, I've been in the dollar debasement trade for decades because I knew the dollar was going to be debased. In fact, it was being debased. It's continuing to be debased, and it's going to be debased at an even faster pace in the future than it has been in the past. But the point is that now more people are coming in to buy gold. What is that going to do to the price of gold? What is that going to do to the price of silver? Clearly, they're going to keep rising. And, you know, the interesting thing about the rise, so I did the podcast a week ago, and there was one day last week, I think it was maybe on Thursday, but we had a $2 drop in silver on the way to 53. There was silver initially jumped above, maybe it was 52, and then it sold all the way back down to 49 and a half, like in the same day. So there was an intraday shakeout. But the problem was, if you blinked, you missed it. There was so much money waiting to buy that dip that before you knew it, we were at new highs. And I saw the same action in the mining stocks, which of course were on fire today. The gold and silver stocks, most of them hitting new record highs or 52-week highs. Right? I haven't seen buying like this during the entirety of this bull market. I've been buying these gold stocks now for 20 years. I've never seen so much buying on an opening gap down. It's almost like it's orchestrated. Like they hit the futures to drive down gold and silver prices just to gap down the mining stocks so they can swoop in and gobble them up.